Okay, welcome to Mocama Sunday service. I am Mo Staxx, and for the YouTubers out there, this is for informational purposes only. This is not investment advice. Investing, trading is risky. Do so at your own peril and in conjunction with your financial advisors, and do your own research. So today, um, I really wanted to kind of just maybe go over like just some broader stock market catalyst type of stuff, just to kind of look at what this next week is like before I kind of go into maybe like some more niche areas and things that I'm doing, specifically one with like ChatGPT. I built my own indicator because you don't need to know how to code now if you use ChatGPT. And then maybe showing you guys like how to scan for stocks if you're looking for stocks with particular characteristics and things of that nature. And then going over anything or any stocks that you guys kind of want to look at either from a long-term perspective or from a trading perspective. Let me share. Can you guys see my screen? Hello?
Yeah,
Yeah, I
we
see
can.
it.
All right. So
Yeah.
so once again, beginning of the week, typically, especially over the weekend, I'm always looking for what's potentially going to throw a wrench into trading or some particular volatility for that week, either to potentially get out of a trade or even to get into a trade. Because if there's some volatility, that's when you're going to see your pullbacks. And I'm never buying at an all-time high, so I'm always waiting for something to pull back. A lot of times after these volatility periods or these economic events can cause really good stocks or really good instruments to have a pullback. So it's like you can either look if you're in a trade potentially to get out or put your stop to break even or whatever is happening if you see something happening this next week, or if there's something that you're looking at and you're hoping that like a period of volatility is going to cause Google or Apple or Amazon, which are all hitting all-time highs right now, to pull back some so that you can get back in. So just looking at next week, the main thing I see Tuesday, anytime the Fed chair speaks, damn, he's testifying Tuesday and Wednesday. All right, so just be on the lookout. If this is at 10 a.m., it's 10 a.m. Eastern, I think. Yeah, I believe it's 10 a.m. Eastern. So this should be at 7 a.m. in the market. So 30 minutes after the market opens on Tuesday, the Fed chair is going to be speaking to the Senate. Wednesday, same time, 30 minutes after the market opens, Fed chair is going to be speaking to the House again. If he says something inconsistent with what he's been stating earlier, it can move the market up or down one way or another. And then we got 2 days of that on Tuesday and Wednesday, and he's the most important speaker from the Fed because he's like the king of the Fed. Once again, the two major things, because I've been following a lot of his recent speeches or conferences, interviews. The main thing, he's been relatively consistent. Inflation and jobs. We were just talking about interest rates, right? So everyone's wondering when they are going to start lowering interest rates, or if they will before the end of the year. At the beginning of the year, they were forecasting 4 rate cuts, and now they're forecasting one, maybe two, right? So and that's because of inflation has been relatively sticky. So the most important things right now that everyone in the market is looking at is inflation data and jobs data. And you'll see Thursday we have jobs data and inflation data, the CPI, both coming out after the Fed chair speaks. So I wouldn't be shocked if we had some volatility on Tuesday, Wednesday, and Thursday. And then you got another inflation metric on Friday, which is PPI, but usually CPI kind of gives us some insight into what PPI is going to look like. Like if this is hot, then a lot of times this is going to be hot too. If this is soft, cold, then a lot of times this is going to be soft too. But the Fed has essentially been saying, look, uh, we're trying to tame inflation, get it back down to that 2% target number, and rates may have to stay higher for longer if inflation is still sticky. The only thing that might change their perspective on that is jobs, because once again, the Fed has two mandates: to keep inflation down and to keep us close to full employment, right? So it's not just one or the other, it's both. So if they see jobless claims go up, even though that's bad for the economy, that's probably going to be good news for the stock market, because if there are more people out of work, that's going to cause the Fed to cut rates faster. If that happens, then the market is likely going to go up, because that's going to be good for equities if everyone thinks interest rates are going back down again. At least being cut a quarter point of, uh, uh, point 0.5 something. We all are looking for interest rates cuts because it's killing a lot of sectors, specifically like the real estate sector, which was what we were just talking about. No one is selling their house right now because they're locked into these low 3-4% interest rates that they got. And so there's way less supply on the market of people selling houses typically. And then there are way less people buying houses right now, because now with these 6, 7, almost 8% interest rates, depending on if you're going like FHA or something more conventional, or an investor type of product like a DSCR loan, the rates are crazy high. So it's keeping a lot of things cool, especially as it relates to real estate. And a lot of these stocks that don't have really high margins have high borrowing costs right now. So they're not Google, Apple, Microsoft with a ton of cash on hand. It's really expensive for them to borrow, which means it's going to be difficult for them to grow in a high interest rate environment. So everyone's waiting on that, and they're trying to get in front of it, where if they believe that the Fed's going to cut interest rates soon, you're going to see the small caps, you're going to see the Russell shoot up, you're going to see maybe the regional banks, KRE, shoot up. All of the things that aren't high margin tech businesses, they need rates to be cut in order to start participating in this rally that has mostly been the top 7 to 10 stocks in the market that have been pushing the entire market up. There have been some other things that have been participating lately, but from the smaller growth stocks that are going to power the future of the stock market, we're waiting on jobs data and inflation data. So if you're looking at CPI, another inflation metric right now, the forecast, at least for the year over year number, is 3.4. If that comes in at 3.3, 3.2, that's going to be good for equities, and you're probably going to see the market tick up. And you see here, it's set to be released at 8:30. What I would tell you guys to do is go, that's an hour before the market opens. Um, Go look at its effect on some of the indexes at 5:30 a.m. so you can see like um how it's affecting the stock price or whatnot, or specifically an index. So generally, what's more important isn't even the number, it's the reaction to the number. And you can see that in the chart. If at 5:30, if you're looking at a 5-minute chart, you're gonna see if this is weak or hot, you're gonna see the chart react in like real time from the release of the data. And what's more important than actually like trying to interpret what does 3.4% mean or 3.3% mean? Like look at the chart and see how people are reacting to it. It doesn't even, this number doesn't matter. What matters is the reaction to it and how the rest of the market is perceiving that number. So I would just look at it. Even if you wake up a little bit later and just look at that 5:30 a.m. 5-minute candle and see how it reacted to the news of jobless claims or inflation data one way or another. So that's next week. It's kind of a hot zone week, Tuesday, Wednesday. And then because it's so contentious right now politically, like I have no idea what they're gonna ask this man on Tuesday or Wednesday that might affect the market, right? And you got a lot of bomb throwers in the house right now that are gonna try and trip up the Fed chair or get him to say something that potentially is gonna affect the market. So watch ahead on Tuesday and Wednesday, or if you're looking for a pullback, there's a good chance that a stock is going to pull back on Tuesday, Wednesday, or Thursday, depending on what the data looks like. Right. So if this CPI data is hot, it comes in at like 3.5 or 3.6% year over year, then you're probably going to see some of these stocks pulling back, which is going to create some entry points to get in some of the names that you may have been wanting to get in. However, if this comes in light, man, some of these stocks are going to continue probably to go to the moon. We're going to probably see new all-time highs if this comes in at like 3.2 or 3%. I doubt it's going to come in at 3%, but if it comes in at like 3.2%, you're probably going to see these stocks hitting new all-time highs, even though they're currently at all-time highs, right? Same thing. And then so next, I always just stock earnings. Is there anything big uh reporting? We're kind of out of earnings season, but there's always usually some random something reporting out of season. Let me see if there's Monday, nothing huge. Not that I trade anyway. Tuesday, nothing huge. Wednesday, nothing huge. Pepsi on Thursday and Progressive. That's like your general like consumer staple type of stuff. So Pepsi sales are be a good indicator of probably the consumer market in general, because it owns so many different types of beverages and whatnot. So Pepsi Thursday, but it's not like, and then the banks are starting to report on Friday. So I would say Thursday with Pepsi, but Friday specifically, see anything on no, nothing crazy other than Pepsi, insurance, Progressive, and the Delta, and but the banks on Friday. So JP Morgan, Wells, Citi, that's probably going to have an effect on the market. Is how well is JPM do? JPM is the strongest of all of the banks, of the big banks. Wells Fargo, Citi have been performing decently. To be honest, I haven't looked at their stocks as much as JP Morgan. But on Friday, and it looks like it's in the morning. So that's going to affect the market depending on how these three major banks do and what they report as it relates to earnings. So I will watch out for Friday too, just in terms of the earnings on JP Morgan. I tend not to trade things and or do any long-term investing just before earnings, because it's really like the flip of a coin. You don't know what their numbers are unless you have some insider information, which is illegal, in terms of like what JP Morgan's revenue numbers are, or what Wells Fargo's revenue numbers are, right? So if I'm getting ready for the week, I'm going with the catalyst for the week. So I know it's going to be probably there's potential for volatility this week because of the Fed chair and the inflation data and jobs data being released next week. And Thursday, specifically Friday, though, with these banks reporting. If the banks are healthy, that's good for the economy. If they're not, especially these massive banks, that's not going to be so great for, I would say, the stock market in general, especially like low cap or small cap stocks. The last thing that I do beginning of the week, I love this app website called Koifin. I always go to market dashboards and go to the U.S. sectors. That over. Right. And so I'm always looking at, okay, so if we look at the quarter, we just ended a quarter. So if you just kind of do like a 3-month look back, what has been the strongest in quarter two? Semiconductors, SMH, which is the semiconductor ETF. So are strong. So the chips have been strong this last quarter. XLK, which is the tech ETF, has been strong all quarter. XLC, which is communications, the most heavily weighted there is Google, Meta, AT&T, things of that nature. XLY, Tesla, Amazon, both have been strong. Tesla's been really strong lately. I don't know why, because I'm trying to stay away from Tesla, but Tesla's been, going crazy. I think they announced some news related to their humanoid robots or something the other day. So Tesla's been moving, and Amazon hit a new all-time high last week as well. XLU, utilities, consumer staples, right? And if you look at this over the last quarter, this is one thing I've been like, if you look at these are the primary ETFs in the market, and you see more on the top side of this line and less on the bottom side, which means that, most of the market has been strong. I would just say the market has been strong. We're still in a bull market, right? Because a lot of these ETFs are still in positive territory over the last like quarter, right? So the things that are lagging right now, at least over the last quarter, has been oil, right? And building materials, industrials, and then the regional banks have been lagging over the last quarter. But if you want to go, I usually don't use this so much, the 3 month time frame for the sectors. I'm usually mostly going to be looking at the monthly time frame to figure out what's been doing better over the last month. And why you see like oil has been weak over the last quarter, XLE, XOP, OIH. Over the last month, OIH and XLE have been relatively strong. So that might be where the market is rotating into right now, is oil or energy stocks right now. So I tried to get in a swing on Friday, a company called Schlumberger, which is in XLE and OIH. It didn't hit my price, so I didn't get in. But that's what looks like it's down the most over the last quarter, but has been turning around over the last month or so. So I've been trying to do some swing trades or some day trades on oil stocks. And if you look at the last month, chips, man, chips and tech have been killing, you know. So I'm looking for a pullback in chips and tech and Tesla and Amazon. Gold has been doing some crazy things. I don't know if I'm effing with gold right now just because it's been crazy volatile, but XLC and communications. So those are like like if I'm building a watch list this month or beginning of this quarter, it's going to be chips. But look, I'm not going to try and catch it when it's at the high. I want chips to come down here and then catch it on a pullback, because things that are trending are more likely to keep trending in that direction. So I really like chip stocks, tech. Like I say, XLY is, what is that? I know this is primarily heavily weighted Tesla, Amazon, XLC, OIH, which is oil. The regional banks have actually been turning around a little bit, financials, but we'll see on Friday. XLF is mostly composed of JP Morgan, Wells Fargo, Citi, Bank of America, and we'll see on Friday if the sector is strong. But I'm not looking to get into anything in the financial sector until I see what the earnings look like on Friday. And then even if the earnings are great, I'm looking for a pullback before I hop into any financial stocks, at least for a swing trade. And then conversely, everything doesn't need to be to the upside. So if I'm looking for things to short, I'm looking for the weakest things, right? So the weakest things right now are utilities and building materials. So, and then there actually isn't a ton of weakness here, because even these things that are weak aren't that weak, right? They're almost at break even or at 0%. So, but if I'm going to short something over the next week or two, I'm looking at XLU, XLB, or the things within XLU or XLB. Those are the things that I'm looking to short. This is oil and gas, but that's weird because this oil and gas ETF is down, but energy is up, and they kind of have some of the same things in them. Oil services and energy is up, but oil and gas is down, and they do have some crossover. But if I'm looking to short anything, it's probably going to be things in these sectors. So XLB and XLU. And if you're looking to see what's inside those things, so XLB holdings, materials, right? So if I'm looking for things potentially to short, it's probably going to be this company, or one of these top five. Freeport, I've traded before. I'm more familiar with this stock, but if the sector is down, then I'm more likely to be betting against these companies rather than holding them. So just in the beginning of the week or on Sunday before the week starts, that's what I'm looking at. It's like, overall, what does the market look like? We're in a bull market. We got some potential catalyst events coming in the middle of the week. We got some big earnings from the banks coming at the end of the week. And the sectors that are performing the best right now are tech, because chips are tech too. but tech has been killing. And recently that's what's working. Right. I made like $1,200 last week off an Amazon trade because tech has been doing really well. I should have made the same off this QQQ trade, but I got stopped out before it bounced right back up. But Amazon didn't do the same thing, and made some really good money off that particular trade. But that's what I'm looking at is I'm looking for these top three SMH, and if we go do the same thing, SMH holdings, NVIDIA is going to be the primary thing in SMH, as well as the other chips, but we're mostly focusing on the weightings, right? Because the more something is weighted, the more it's going to affect the ETF, or the ETF is going to affect it. So where's the holdings right here, right? So if we look at SMH, the most heavily weighted name in SMH is NVIDIA at 20%, TSM at 13%, Broadcom at 8%, AMD at 5%, ASML at around 5%, right? And those are probably the top names that I tend to trade are these four. I've been messing with Qualcomm a little bit lately. That's been a little volatile. But those 4, 5, 6 names are the ones that I typically trade in SMH. So considering what I just showed you, SMH is up over the last month and over the last quarter. That's the strongest sector in the market. I'm waiting for a pullback either on the ETF itself or individual names within the ETF, because what's strong is likely to keep being strong, at least in terms of like probabilities of follow through. So these 5 or 6 companies are the ones that I'm waiting for a pullback in. Same thing with, what do we say? XLK is the second strongest over the last quarter and over the last month. So I'm gonna do the same thing, XLK holdings. I already know that it's Microsoft and Apple that are the heaviest weighted in XLK, right? Oh, actually, NVIDIA replaced Apple. I stand corrected. Which is why I look at these things every month. Typically, XLK is most heavily weighted Microsoft and Apple, but apparently they dropped their Apple rating and put NVIDIA up there, right? So Microsoft, NVIDIA, Apple, Broadcom, those are the 4 main names in XLK. So same thing, I'm waiting for a pullback, especially Microsoft. I've been waiting on a pullback on Microsoft forever. NVIDIA, same thing. Apple, not so much, just because like I still have some issues with not Apple's fundamentals, but their they need a new product offering other than them damn vision goggles. Something else that's going to be their new iPhone from a long-term standpoint. I will swing Apple. I will trade Apple, which is what I did recently. But long-term investment, I need to see them come out with some new iPhone type product that's going to be the next big thing. And so, yeah, but I'll wait. But it's been looking strong as hell. So I'll still, I'll swing this over a week or a couple of days. Um, who is for? Yeah, I'll swing this over. Who is Francisco? I just let somebody in named Francisco. Who is that?
That's my boy.
Oh, okay.
Yeah, I've been telling him about it, so he's gonna jump in.
Okay, for sure. Yeah, so that's what so these are the stocks. So if I'm specifically like, what am I trying to, let me put SMH back up, SMH holdings. And just to showing you how I do this, I just go Google, SMH, the ETFs. It's just important to know how the ETFs like affect the market, because a lot of people who are investing very conservatively aren't going to buy individual names. They're just going to buy the ETFs. But if you're buying the ETF, you're also buying the individual stock. That's going to push that up. So if you're just looking at the sector, right? So I'm looking for what happened. I'm looking for pullbacks on NVIDIA, TSM, Broadcom, AMD, ASML, and Qualcomm. Just in terms of names that I like to trade. XLK, I'm looking for pullbacks in Microsoft, NVIDIA again, Apple, probably a lot of the same names you'll see. Salesforce has been doing really well lately. Didn't pull back as far as I wanted, so I took HubSpot instead of that. But that's what I'm looking for. And then if I'm looking to short, here are the names that I'm looking to short. Specific Freeport usually has more liquidity. But these names I'm looking to short because they're the weakest. And then I said XLU was weak too. So if I'm looking to short anything, it's going to be Dextera, Southern, these things inside of XLU, if not shorting the ETF itself, right? So that's how I'm building my watch list every week, every month. I'm looking at catalysts. I'm looking at I use this app that this class that I'm taking. She introduced me to this, but it's amazing to figure out like what the sectors are doing. So if you see these sectors, what's up, what's down. So what's already up is likely to continue going up. So these are the top two that I'm looking for pullbacks in. I don't want to buy them at all-time highs. And then, like I said, Tesla, Amazon, and XLC. Just to show you XLY. And I should just check because apparently XLK has rebalanced. X XLY is 23% Amazon, 18% Tesla. Oh, and then some Home Depot and McDonald's too, right? So those are also names. And so Isaac, remember we were talking about Home Depot the other day,
Yes, sir.
right? So Home Depot is in XLY, and as you can see, XLY has been relatively strong. So if you see a pullback on Home Depot or comes back, this is like this is something I might look at because Amazon and Tesla are going to prop Home Depot up because they're in the same ETF. And this is decently heavily weighted. Anything that's more than like 4 or 5% of an ETF is heavily weighted. And most ETFs have heavy weighting for specific names with the exception of like what is it? What's the biotech? XBI? You'll see XBI is almost equal weightings when they rebalance, right? You're never going to see anything over 4% unless it shot up during the last month of the quarter, and then they're going to rebalance everything. So there is no extreme weighting and like an ETF like XBI, but in most of the major ETFs, you're going to see extreme weighting like that, like 23% of XLY is Amazon, 18% is Tesla, right? SMH, 20% is NVIDIA, 13% is TSM, XLK, 22% Microsoft, 20% NVIDIA, right? So just understanding the weightings, you can see, hey, if the sector is doing this, I'm waiting for a pullback here. And here are the names that are going to be on my watch list, either to take up or to short because of what the sectors are doing. That's how I'm building my watch list for the week, for the month. Um, I'm looking for strong things to get stronger, and I'm looking for weak things to get weaker. And I'm going to take those two in those particular directions. All right. Y'all feel me? Does that make any sense?
Makes sense.
Yes, sir. Yes, sir.
All right. So that's just like overall broad, like this is what I'm gonna do every Sunday or early Monday before the market opens. Sometimes too in the market too specifically, I might do a 1 day sector chart to figure out, hey, has something that's really strong pulled back for that particular day. So if I see SMH down here, I'm like, oh, here's my pullback chance. If I see XLK or XLC down here for the day, here's my chance on a pullback, on a strong sector because on the month or the quarter, it's up. But if I see 1 day over the last day is down, here's my opportunity to hop in something that's strong that's had a really bad day. And that's when I want to enter a long position in something strong is after it had a bad day or two. And then essentially buying the dip is what everyone's saying. Buying the dip when something's exhausted. I'm mostly an exhaustion trader now. I used to trade momentum and breakouts, but now I want to buy things once a lot of sellers have sold, buy low, sell high. I just feel like you get more of the move if you're kind of buying on the dip rather than on a breakout. Stop sharing that. All right, let's go
Yeah,
to.
I like that too because I've been doing that with DoorDash. So I want to see if you talk about a little bit about DoorDash too, because I feel like
Uh,
DoorDash has been doing that.
let's do that because I'm still in that trade too.
Yeah, I got out of it and I got in a new one. I got right in at the peak of it at 107 a put, and then it skyrocketed to 110 again.
Yeah, last Friday it came back down. But you see how I've been saying I love my 200 moving average, and it's been hugging it.
I love your 200 average also because it's
Yeah.
so been working.
It's been hugging it, especially if it's in a strong sector, a strong stock. Dash, I would call Dash a technology stock, but it's not heavily weighted in anything. So I would say the ETFs are going to have less of an effect on DoorDash because it's not heavily weighted in something like a Microsoft or an Nvidia. But it's if tech goes, DoorDash is probably going to go because it's still kind of in that tech sector. Um, but I love my 200. Like something that's been strong relatively recently, it comes down to the 200. There's a good chance that it goes. Conversely, though, just to show you the opposite side of that, is Disney. Disney came down to the 200 and fell below it, which is why I cut it. And this is why I've been explaining to you, Isaac, is cut your losers fast. I'm not waiting for this thing to drop lower. Soon as it went below, I told you if it got below 100, I was going to be worried, right? It fell below
Yes, sir.
100 that one day. I got out. Not even going to think twice about it, move on. And instead, I put that money into HubSpot, which has been doing relatively well for me since.
Really great.
Got in on
I
that
wish
day.
I would have stayed in a few more of those trades.
That also hit that 200 and is right at that fib level there. Right. So that was another sign for me to get in. It fell a little bit below, but I think I got in on that day. And ever since then, I'm up like 5%. So I could even, if I were being really conservative, I could move my stop to break even now. Worst case scenario, I'm playing with house money. And if it keeps going, then, there's like not limitless upside, but upside here probably be target one. And then it could potentially go to the all-time high. What I really like about HubSpot too is that the number one in the sector CRM has been showing a lot of strength. Look at that. So considering the other CRM stock, Salesforce has been doing great. And if that keeps going like that, I feel like HubSpot's going to follow it because they're in the same exact industry, selling the same exact stuff. So HubSpot's been weaker than CRM, but the fact that CRM has been showing strength recently gives me confidence that HubSpot's going to keep trending in this direction too. Right? Okay. So let's look at, I'm gonna show you something that I did. If you guys see these new red and green dash lines on my chart? Can you guys see these?
Yeah, I see it.
Yep. Yep.
These are not looking at this. This is the 21 average, the not dash line, but the full line is in that moving average. But I figured out a way to have ChatGPT write code me a script that would put the true average true ranges on a stock, right? And what I like about the average true range, I like trading in mathematical probabilities. So using an ATR is just using past prices. I usually use the last 2 weeks of pricing to tell me to try and get a sense of the volatility of a particular stock. And typically, things aren't going to go unless we have a random, extremely volatile day too much past the ATRs. And this is the red one is, hey, if this is a stock that's more bearish, I want to short something if it gets to that red line. And I want to definitely buy if it gets to that green line on something that's strong. And it's going to be exhausted. If it gets there or gets close there, that's kind of like a separate confirmation to me. Like, hey, this stock is exhausted. It's probably going to bounce at this level. And I also figured out a way for it to kind of give me signals. So looking at HubSpot, if you look at this arrow, that was the day we bought it, which was pretty much my indicator. This is post me trading, telling me that this was a good day to get in. Just because it went past that green line, that dash green line, and which is like an exhaustion area, which means, hey, all of the sellers are probably gone. And then you see it wicked. Whenever you see long wicks on a candle, that means demand is like right there. That means there's a lot of buyers there and it didn't stay there for long. If you see a full bar like this one, like the selling might not be over yet. But if you start seeing these wicks coming up off prices, that means it hit that level and then got bought up real quick, which is telling you that there's underlying demand. When there's more demand, price is going to go up. When there's more supply, price is going to go down. So if all of the supply is gone, because all of this selling that happened up here is probably done, and you start seeing these wicks off different areas, that's a good indicator that there's demand there and this thing is potentially going to start turning around. But like there's so many tools now, and with all of this AI integration and whatnot, man, start using it to your advantage. So I just want to show you. I paid for the $20 subscription, and it's been the best money that I have spent. Where is, I think it was this one, right? No, that's when I was trying to do a simulation. Hold on. Maybe it was this one. All right. So I just asked ChatGPT. This will be the next section. That's why I said, man, use this stuff. What are the best indicators to use on Thinkorswim for an exhaustion trading strategy? It gave me the RSI, which I use frequently, stochastics, Bollinger Bands, the MACD, and volume, right? And it gave me some other things as well. And then I said, can you write me a custom indicator using ThinkScript with clear visual signals that will indicate when a symbol is exhausted? And what did it do? It wrote me a script. Then I might have it, so then when I put the script in, it gave me some errors. And so where was the next one? Oh, I said ThinkScript gave me these errors, right? And what it did was it corrected the code and then wrote me a new script that corrected those errors, right? And then I kind of did some additional adjustments, tell them it not to plot certain things on the graph. It adjusted it for me. And then I said to replace the arrows below the corresponding candle on the main graph. It did that for me because I just showed you that, right? And I essentially just built my own custom indicator, and then I went into the chart. You go into here, bam, right? And if you go to create, you can just copy and take this out, copy and paste that code, and create your own indicator. And then when that happens, it's going to show up like, what did I name it? I called it Mo ATR, right? And so now that's no, I did an ATR. That was the ATR. And then I also did those candles and things are like an exhaustion indicator where it'll give me a green up arrow if it's exhausted to the downside and a red down arrow if it's exhausted to the upside, right? To kind of, and I know it's calculating all of those indicators that ChatGPT gave me, which were signs of exhaustion, and put them on the chart, right? And this is what it's giving me, right? And it's on every stock, every ETF, Apple, right? When to get in, when to get out, right? And if you go look, it's been pretty accurate, right? If you would have took this to the downside here, you probably would have did really well if you would have got out in time, right? And I found that we're on a daily chart here, that it works better for day trading on a 5-minute chart, where it's just giving you points like, hey, this is where you should get in, this is where you can get out. I kind of used it on Amazon that Friday. This was like a week ago. I feel like maybe I got it on this day right here, but it does pretty well of like, hey, this thing is exhausted. I'm trying to figure out how to maybe make this a little bit more I would say accurate, because if you would have sold here, you would have lost, sold here, you would have lost. And what I do like is when these things line up with these ATRs that I've drawn, right? So it's just like having multiple indicators for what you want to do. I want to find a better example of something that did. It was something intraday that I was like, let's go to QQQ. Something that was close to 8 here this day, right? This would have been a great indicator for me. It's above this average true range, which is telling me is exhausted, and then getting these arrows here, right? It's above the average true range. and then I'm getting these red down arrows at the same time, which is telling me that it's exhausted using all of these other indicators. Because if you look at the RSI here, it hits this level up here. Anything above 70, if you're using the RSI indicator, is telling you that something is overbought. Anything below 30 is telling you that it's oversold. And you'll see like these arrows correspond with those conditions. So here, green arrow, you see we were mad oversold. Here, red arrow, you will see that we were mad overbought. I probably wouldn't have taken this one though, because I knew we were close to the true range. I would have, if I would have taken this trade, I would have sold right here before we got to this potential the ceiling right here, which is telling me, hey, the range of this stock or this ETF, it typically goes down when it hits this line from over the last 10 days, just aggregating all of the numbers. So I probably, if I would have took this position, I would have sold it before it hit this area. But I would have been more comfortable taking this down because since it's above this red line, the true range, I know it's more likely to have follow through to the downside. So if I would have took this candle right here, this candle right here, I would have made really good money on this day with QQQ, and tried to get out. There are also indicators where if I'm shorting from here and I'm like, should I hold on to the trade? If I see this green arrow, this is a good place for me to sell, you know because it's telling me, hey, there's a good chance this is going to bounce here. I probably would have sold at least a half a position right now, right here, if not my entire position, but at least a half of my position would have been gone. And if I would have held on to the runner, I would have done really well. But I probably would have sold another portion of the position here, especially here when it looks like it got super exhausted. If you're looking at the RSI, which is an indicator, that got way low. So, which is telling me that people are probably going to start buying. And look, you saw that long wick off the candle. So this would have been a good opportunity to kind of like get out of the trade completely once you start seeing that green arrow pressing everything back up. But I'm using ATRs, I'm using moving averages to figure out what is a good time to get in and out of a stock. Long term, the signals don't show up as often as if you're looking at a 5-minute chart, right? So if we look at Home Depot, look at that arrow. If you would have shorted it on this day, you would have did really well, right? I don't like that this being an XLY is not showing the strength of Tesla and Amazon, but Tesla and Amazon being strong, and this looks like it's consolidating. But I would try to maybe, if I'm going to catch Home Depot, I'm trying to catch it at like 325. You guys see why I would say I'm trying to catch it at 325? It's the question for everybody. Do you see why, from looking at the chart, why I would say it's 325? Isaac? Y'all still there?
I am, but it's
Yeah, I
looking
get
like
it. Yeah, yeah. I see. I see why you say it's 325 because it's right by that 327 and 84 cents mark.
Well, why I'm saying that is so just because I've been charting for so long now, I'm looking for consistency and price. On this day, if we zoom out a little bit more, right? These were the lows of this recent trend of consolidation. You guys see that here?
yeah.
The low
It
is
is
at about approximately 325. Because if we zoom into these lows, like there are so many lows in that area. This just reading price action. Price action is probably the most reliable thing that you can rely on when you're looking at charts because it's history. People bought this stock up when it hit 325, right? And they're selling before it hits 360. You could just look at the chart, and that's what the chart's telling you. At least over the last, when was this? Since April? And since April, if this price gets down to 325, they've been buying it. Right? Even here, it kind of got close. And then when it gets to this next level of 360, at least right now in this consolidation, they've been selling it. So I want to buy at the edge and I want to sell at the edge. So looking here, I like 325 because if we just have one price range like here hit that 325 or close, I would be less confident in taking HD. But the fact that I see it hit there once, twice, three times, four times, five times, six times, seven times, that's a great indicator that that's a floor on 6 consecutive days, almost consecutive. It's hit that range, 325. So where is it likely to bounce? Historically, the prices historically are telling me if it gets to 325, it's likely going to bounce up from there. And that's a good place to take that trade. So that's what I'm going to look at. And if you don't want to watch it every day, just set an alert where the platform will send you a text. Oh, I said 325. If it hits at, and I actually like 326, tell me a little bit earlier, right? And I'll set an alert there where if it hits 326, it's going to send me a text. It's going to send me an email that says, hey, Mo, go check out HD. It might be at a price. So usually when I'm hitting y'all, like with that HubSpot trade, I was like, I got an alert saying, hey, this is close to the price that you want to enter the stock at. It's close to that 200-day moving average. So I did that and I executed. As soon as I see that, so I saw a good price to get in, I just bought because like trying to trade like a robot if you can, trying to take all emotion out of it. I have a strategy long term with my leaps and my stock buys. I like to buy them close to the 200. And here we see HD is a little below the 200, but it's inside of a strong sector because I just showed you what XLY has done over the last quarter and the last month. It's relatively strong. So I'm taking a stock that's likely to rebound, that's inside of a sector that is really strong, which means that the tide is going to be moving with me. That's what I'm looking for is weaker things that are pulling back in strong sectors. Those are likely going to have more follow through. But worst case scenario, if I get this at 325, I might place a stop below the lows of these candles. So it looks like the low here is 323. I'll probably place my stop at somewhere at like 322 something. So that's $3 of risk, right? And I keep going over this risk reward thing so you guys can see. And actually let me label these. So let's say if I label this entry, right? Entry trigger 325. My stop is going to be probably somewhere around 322, just under 322.50. Just because things tend to bounce at those 50-cent marks and those dollar marks. So I'll probably have a stop right around here. And let's say call that stop loss. So if we're talking about risk reward, my risk is 325 to 322, right? Which is about $3 of risk, right? So if I enter this trade at 325, if it gets below 322.50, I'm out. I'm done. I don't care what it does. It might bounce. My thesis is wrong. But what I don't want to do, I don't want a stock making newer lows, right? The low right here is there. If it bounces quickly, okay, great. I'll give it a little bit of wiggle room, but I don't want to see a new low. If I see a new low, that's not great. I want to see new highs. Like here, you see the high was this, and then you saw another high here, which means it's trending upward in the right direction, and I'm not seeing newer lows. If I see a newer low, my thesis is wrong. I'm out. I'm only going to lose a few $100. I'm not willing to risk more than that. I'll wait for HD to drop even lower before I hop back in. But that's my risk to reward ratio. And then let's say my first target is going to be probably at this high right here, which is 357.69. So let's say at like 356 is when I'm going to want to get out. At least out of my first position or like half of my position. So if I bought 100 shares, I might sell 50 of them right here, just like to have a simple. So I would call this T1 or target one. This is for a swing trade. I do sometimes, I do my leaps and I might hold on to a leap for a lot longer, but I'm probably going to get out of half of my position if it hits target one. But so if you look at 355 or 356 minus 325, let me use this calculator over here. 356 minus 325. That's $31. So I got $3 of risk and $31 of potential reward. That's a 10-to-1 risk reward ratio. That's the type of trade that I'm want to enter. So I'm going to make $10 for every dollar that I potentially am willing to lose. Those are the types of trades that I want to enter. I don't want to
My,
trades in the middle anywhere, because then my risk reward gets cut. Then it becomes 1-to-1. I want to have an opportunity of getting an outsized return and very little risk, which is why I like catching things when they're exhausted or at the edges or buying the dip. But on names that I think are going to turn around. Why do I think this has potential to turn around? Because as I showed you, it's in a sector that's performing well and is relatively high weighted in a sector that's performing well. Home Depot is an XLY and it's 8 to 9% of XLY. And if you look at how the sector's been performing over the last month, it's one of the top 3 sectors. Over the last quarter, it's one of the top 4 or 5 sectors. So the sector is trending up. It's Tesla and Amazon. If they keep going, it's going to push HD up because they're in the same ETF. And I'm waiting for a pullback or a good price to buy something in a sector that's doing relatively well. Right.
so wait, can you show me what that trade would look like? What you just explained. Like how would you
Well,
execute?
how would I tackle it? The simplest way to tackle it would be to buy shares.
Hmm.
But you know me, I like my leaps because I can get more leverage on my cash by buying options. So the first thing that I'm going to look at is I can always buy shares of these things, but look, the shares are expensive. It's $300,
Yeah,
$334. So I don't usually like to buy less than 100 shares or something, which would be 30 grand. So
yeah,
I would rather not spend 30 grand on one trade because typically if I'm buying shares, I usually don't like to put more than 10K into buying shares of anything. So the first thing I'm going to do is look at the leaps. Does HD have something that's a year or two out, or year to a year and a half out that has some liquidity? And right now, looking at the June expiration in 2025, I don't see any liquidity right now at the strikes that I would be interested in. I don't see any
yeah.
liquidity there, so I'm just going to keep looking. So let's go to January 2026. I don't see any liquidity there. I see December, no liquidity there. Like it's bare. Uh, let's see if I do not such a leap. Let's say March. I still don't see any liquidity. So for me, the only way that I would be able to tackle this and feel comfortable, I would buy shares of this because there's no liquidity in the leaps that are further out
Yeah.
unless you're going out of the money. And I don't like going out of the money. I like to be deep in the money in my leaps. So yeah. So looking at the options chart, unless something changes when it hits that number, I would probably take this down with buying shares. So whatever 10,000, because that's usually my price, 10,000, because I don't want to be overextended on one name versus another, divided by 334. So I would buy like 30 shares of Home Depot,
Yeah.
right? Approximately. I buy like 30 shares of that. When it hits 325, place a stop here at around 322.45 or something like that. And then my initial target to sell half of those shares or 15 of them would be if it hits around 356. How I would program that trade in is I would just go to see if I want to buy it at 325, hover the line close to there, buy if I want to do with the OCO bracket. And so let's say I said 30 shares, right? So I will buy 30 shares at 325, right? And you don't want to do a limit order if it's above the current price. So what I would do just is the spread crazy? No, the spread is what, 60 cents. So I would be fine doing a market order because the spread isn't crazy on this. And then I would come in here and only submit when the mark is below or equal to 320 if I wanted to catch it on the down slope. And let's say if I'm not watching it, I probably wouldn't do this. I would just set an alert and then because it might keep dropping further than 325 and I might want to grab it a little bit lower, you know?
Yeah.
But if I'm at work or something and I can't watch it, I might just set a bot to enter the trade if it and trigger when HD is below or equal 325, do a market order. And I know worst case, if there's a 60-cent spread right now, my worst case, they'll fill me for 325 and 60 cents, 60 cents above what my market order, what the spread is looking like. Because there's a 60 cents difference between the bid, which is what people are willing to buy it for, and the ask, which is what people are currently willing to sell for. The spread, given that this is $334, 60 cents on 30 shares is what? 60 times 18 bucks. I'm not worried about losing $18 by just getting in with a market order. So I
But with a
did.
market order, so why would a market order, is it still taking you down to 325
No, a
as
market or
opposed?
so imagine you were entering a market order right now on HD. Let's say the market's open. It's going to fill you at this higher price right here at 334.97.
Exactly. Yeah.
Ideally, I want to enter at 334.31. But a market order is going to get you at the most expensive price that people are willing to sell the shares for, the ask. So you're going to lose 66 cents by doing a market order versus a limit order is more like a scalpel. If this were $5 or $10 wide, then I wouldn't do a market order because then I could lose $5 to $10 on every single share by essentially what they call slapping the ask, just getting the shares for the asking price.
Yeah.
Ideally, when you're doing a limit order, you put a limit order in closer to the bid, so you're getting the cheapest price available for those shares.
So with that whole 325 number we were talking about, does that go out the window once you do a market order, right?
No, because I put a trigger right here. Only execute this if this is below or equal to 325. So this isn't
Oh,
going
I
to
guess.
execute until my trigger hits. Yeah.
Okay, and that mark, and that's the mark number you put right there.
Yeah. At when HD gets to 325, if it gets there, then buy 30 shares, no matter what price the ask or the bid is currently at. And then it's going to fill me for whatever the ask is. Worst
Okay.
case, it's if I'm seeing the spread right now is about 66 cents. My worst fill is going to be at $325.66.
Okay. Yeah, that makes sense. I just
Which
didn't
isn't
see, I missed the putting in the mark part.
Yeah, which isn't crazy because that's with 30 shares, it's only 18 bucks. And I'm trying to make a few thousand off this trade. So
Absolutely.
losing 18 bucks to get in when I want to get in isn't a big deal considering the spread is relatively close together, 66 cents, rather than let me go look. What's something that usually has a crazy spread? Like right? Look at XLI. The spread is $2.
Mm, yeah.
So doing a market order on XLI is going to lose you way more money than doing a market order on HD, which means there's more liquidity in HD, more people buying and selling than in XLI. And I could tell because the spread is further apart on a less expensive stock, which tells me less people are trading this. And so you need to be more precise about your entry into XLI than you need to do with HD. And then if you're trading something like SPY, usually the spread is like 2 to 5 cents. And this 1 cent. So it doesn't matter. Market orders on SPY is not going to matter because the spread is 1 cent apart. You're losing 1 cent. So I would lose 30 cents by entering a market order on SPY because who cares? And yeah, that 1 cent difference is just not going to make a difference.
Yeah.
So SPY is extremely liquid, which is why the spread is so close. It's 1 cent apart. HD is a little less liquid, 66 cents, but something like XLI, which I don't trade often because of liquidity issues, is going to be $2 apart. So you need to be really precise about your entry orders on XLI versus like a SPY or like a QQQ. QQQ is 10 cents, right? Highly liquid, traded. Tesla is usually extremely liquid. Spread is 19 cents, right? So, but just to show you how I would execute, especially if I wanted to have stops. So my stop loss on here, I said was going to be what, 322.45. 45. And then my T1, actually make sure these both say 30. I would actually put 15 shares here because I only want to sell half my position on my first target, my T1. What did I say? That was going to be around 356. So if I wanted to pre-program in everything, that's how I would do it. And I can send it because we're at aftermarket right now. And that's how it's going to look. And the market order is here right now because that's what the current price is, right? But
Yeah.
but the trade says don't trigger until it gets down here.
And how did you put that mark in? Did you just like double click on the?
What happened?
How did you put the mark in for your trigger to buy
Uh,
that
well,
number? Like,
oh, this is
like
an
not how did you figure it out, but how did you actually tell the
this
computer or tell
this
the
is an
program?
alert. So it's just like tell me if this gets to 326, tell me. I right click
Mhm.
and
Okay,
then go to where's the alert? Here, hold on. If you right click and go to create alert.
gotcha.
And then
All right, fellas, I'm out.
all right, deuces, DeAndre. Yeah, right. And so if you wanted to at or below 325 or 326, because right before it gets to the price, you just click create and then it'll create that mark. And if you have your platform set up to notify you when that happens, it'll send me a text, you know.
Oh, and so that's when you actually execute the trade that you already put in.
Yes, but I don't. So, like for this, I probably wouldn't execute this like this. I was just showing you if you're at work and you don't want to miss out, you could
Yeah,
pre-program in your trade the way that I did. And then when
yeah,
this hits 325, it's going to execute. It's, but what I would do, I wouldn't do that. I would just set an alert. And then once the alert goes off, then I'm going to be watching it. And then because I don't want to, because if it hits 325, it might go down a little bit further and I can get a better discount on it, you know?
yeah,
So,
yeah.
right. I might go look at a shorter time frame to see, hey, does this thing look like it's bottoming out? Are all the sellers gone from looking like an indicator like the RSI or my custom indicators? Is it close to the bottom range of this ATR when it gets to 325, which it looks like it would be, depending on that day? So if it gets down there and all of these things are headed up, then I'm like, okay, I'll enter the trade. I might even catch it a little earlier than 325 if it looks like it's getting ready to push up a little further, you know, because my risk is $3. I'm willing to risk $3. On 30 shares, $3 on 30 shares is what? 90 bucks,
Yeah,
right? I'm willing to risk that for an opportunity to make $30.
makes sense to me.
Right. So catching things at edges from a risk reward standpoint and just looking at prior history. If you see a lot of bounces in the same area, that's why we entered in DoorDash, right? If you like that 110 price, it's been holding. It came down a little bit, but then it popped back up on Friday. It was close because look, this mark is my stop. I don't pre-program all my stops anymore either. What I'll do is set an alert. I want to sell Dash if it gets below 105.50. It didn't, right? It almost got there and it didn't, and then it bounced back up on Friday. So now I'm
Yeah,
back in the same territory. But if it gets below 105.50, I'm out. I'm selling. But I'm hoping that this bounces, right? I forgot where I got in, but it wouldn't have been more than like a $3, $4 risk reward type of situation. And I'm hoping to swing it back up to 123, probably for T1 and then a potential T2, 143. Probably this might even be T1 up here. Because if you zoom out on DoorDash, at least like on a 5-year chart, the high was 257. So that's the mark ideally that I would love it to get back to. But if I'm being conservative, Like I might sell some right here and then sell some more right there, and then maybe keep a runner.
Yeah, just in case.
Yeah, and because I'm playing with house money at that time.
Yeah.
So if I'm playing with house money, I'll set a stop to break even, and I'm just playing with house money. I could just let it go. There's no anxiety because I've already made my money. I've already cashed out on a little bit. All right. Before we leave, anything else anybody want to look at? Different stocks you've been looking at?
Yeah,
I can't hear you. You broke up.
I was saying that was a good game. Good game. Good
Yeah.
information.
Anything you've been looking at, Angelo?
Nah, man. Just everything in general,
Yeah.
but nothing that I'm on, you know.
Broadly speaking, though, we're at all-time highs. If you look at the
Yeah.
NASDAQ futures, all-time high, right?
Or actually, look at the AIQ ETF. It's a
Uh, AIQ?
yeah, AIQ. I just heard about it on with Boyce Watkins. It's a artificial intelligence ETF.
It looks good for right now. I'm just looking at the
Yeah.
chart long term. It's trending positively in the right direction. My issue is I want to see what's in it. AIQ Holdings.
Yeah, it's like Nvidia.
I want
Let
to
me
see
see.
what the weightings are in the holdings.
It's nothing too strong. The strongest is Nvidia at like 5.2%.
Yeah. Nvidia, Tencent, isn't that a Chinese stock? I think
Yeah,
it's
I think so.
and Meta,
Which is
Broadcom. So it's kind of the weightings are different from like an XLK or QQQ, but it's actually very similar to a QQQ. Let's go look at QQQ holdings. Uh, Microsoft, Apple, Nvidia, Broadcom, AMD, Nvidia, Tencent, Meta, Broadcom. It's a little bit different because Netflix is usually an XLC, Meta's an XLC. So I would say this is like a mix between like QQQ and XLC to a certain extent, and SMH because it has some chips in there too. So it's like I would say this is like a combination of SMH, XLC, and XLK.
you said
Right.
which three?
It's like XLC is Meta and Google. Those are the two most heavily weighted. Nvidia is most heavily weighted in SMH and Qualcomm and Broadcom. Netflix
Hmm.
is also an XLC too. And Amazon's an XLY, Amazon and Tesla an XLY. So actually kind of like a mix of all of those 3 or 4 ETFs that I was just talking about. This is like a mix of those in terms of the weightings, but there isn't like any crazy heavily weighted names in here, like a 20% or 15%, right? Nvidia
Yeah,
is the highest weighted, and that's probably because it's been up the most. I don't know how they do rebalancing if everything's supposed to be even or not, because I'm not too familiar with this ETF. But looking at the numbers, this looks like an ETF that tries to have equal weighting of all the names in there. Nvidia is probably just up because it's been on a tear.
yeah,
Same thing with Meta and whatnot. So it looks like more of an equally weighted ETF with combinations of SMH, XLK, and XLC and XLY, which are mostly tech and chips and communications. That's what it looks like. But just looking at it, it looks good, you know. And an ETF is just a combination of stocks. So those stocks we saw are good stocks within it, and it's positive. Just looking at the trend, higher lows, higher lows, higher lows, higher lows, higher highs,
yeah,
highs, higher. So it looks good. It looks like a good name.
yeah. I think I first heard about it was at like 27, and I almost jumped in,
Yeah.
and then
But
I held off because it jumped to 30 before I got in. I was like, oh, well, I'll wait for it to get back down to 30. It
yeah.
never went back down.
But you know me, like just looking at the chart, that 200 is the area to enter.
Yeah, 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 yeah,
It didn't get down there right there, but it almost did, but it bounced. But that 200 or close to it seems to be that's if we're in a bull market anywhere, we're in a bull market and tech is trending, that 200, if it pulls back there from a long-term investment standpoint, if you're trading it, that 21 or that 34 or right here, it hit that 50 would be the best number. So like short-term trade, I would try to catch it around that 34 or that 50 moving average. Long term,
yeah.
I want to catch it around close to that 200.
Nice. Appreciate it,
Dope.
man.
All right, folks. That's it. Mocama Sunday service. Next week, 8
All
a.m.
right, man. Have a good
Appreciate
time.
you.
Safe travels.
live from New Orleans.
Dope.
All right, folks. Next time.
All right,
Peace.
man. Be easy.